Good morning, guys. Hope you're doing well for Saturday morning. Last Saturday before what they say is the defining elections of our lives. That's what they say. I just thought a thing about that because yesterday I saw a video of politicians over the last maybe 20 years saying that every single election was saying is the most important election of our lives. Maybe it was not before, but it's potentially the one this time because the choices that we have today in the US are so opposite that yes, I mean, at least for half of the population, about half of the population, it will definitely be one of the most important election of their lives. So depending on where you stand, this means that it's an important election for everyone in this country, in the US, for its future. I mean, I really believe it's a defining moment because we are at defining moments in many ways. Politics, obviously, in the US, geopolitics, everything happening around the world, Ukraine, obviously, the Middle East, probably China getting ready to get in the game, as we've seen last week with Taiwan. So I mean, all of this will be quite interesting to see, and I probably will get into a very interesting decade. Last thing that I forgot to mention was the U.S. economy and the U.S. debt will be another defining probably moment. I, if you want to give me a second, I will take my dog out of the room because she will probably bark like crazy when the only issue is that she's kind of a bit of crazy. I guess she's like owners. I guess. Yes, I don't call myself a dog dad. I mean, I just find this ridiculous. But that's just me. Okay, so maybe we can start. We are what 3 minutes into it. I hope you guys had the time to join. So we're ready to go. Probably today will be quite shorter than usual. Probably, hopefully, I would say because there's actually nothing much to say, to be honest. Nothing much happened this week, whether on geopolitical side, on the economy side, a little bit of data, obviously, and on the market side. Yes, we had a move on Thursday, but it's just nothing like crazy anyway. Some of it was recovered the next day. So, what I would like you to do, and I would like you to think about, is if you have question at the end, because I hope we will have time. So, if you have question, just write them now in the chat so that they can appear rapidly and I can see them. And we'll talk about it at the end of the show. It always feels weird to me when I said the show because I always think like I'm a kind of a amuser, a clown somehow. Maybe you think I am. I don't know. This is what it is. So thank you for being here. So let's start. So what's important these days? Obviously, like I said, in the quick introduction, it's the elections. So we have our two friends, Donald Trump and Kamala Harris, who are fighting for the seat, job of president. I mean, the latest, not polls, but predictions from betting markets are really interesting. A couple. So you see that overall, the prediction markets are predicting Trump. That's the last one that I found. Maybe it has evolved because Kamala Harris seems to come back slightly, but Trump is about 60% at this time. But it's far much more complicated than that. If you look at the map, actually, we are about 3 states that are yet to be kind of decide at this time. If the predictions for the other states are correct, obviously, but it seems to be going down to 3 states: Pennsylvania, obviously, which is kind of a toss-up. No, not exactly. I will tell you. I'm sorry, I just made a mistake. No, Pennsylvania is not a toss-up. Pennsylvania is still heavily leaning towards Trump at this time, but again, it's evolving pretty fast. And then we have Michigan and Wisconsin. So the first one so we had a couple of days ago, only 3 to 4 days, maybe beginning of this week, we had all 3 states. So again, in the prediction markets, according to Kalshi, going to Trump, all the 3 of them. This has reversed for at least now 2 of them. First reverse was Michigan, where we had Kamala Harris coming back in prediction markets, and now is supposed to be leading in Michigan. We have a similar situation in Wisconsin, which was the second that, going back from Trump leading to a toss-up to potentially now Harris leading in that state. And in Pennsylvania, Trump seems to be still leading at this time. So only 4 days before the elections. So things are changing pretty rapidly at this time. Let me show you this. If I remove myself, so you see, for instance, the election in Michigan, it's always been very close. Again, Donald Trump was leading very recently. He's not leading anymore. Kamala Harris seems to be taking the lead. So I think probably the election will be very, very close. And this is probably why we have started seeing some allegations, I would say, coming from Pennsylvania about irregularities. And that makes sense because this is the state that the Democrats have to win at this time. So that will be very interesting. The other, I think it happened this week. I noted this week, but it might have been the week before. I don't remember exactly. But you probably have seen that the Washington Post refused to endorse Kamala Harris based, on Jeff Bezos' instructions. Sorry. And also the other ones that refuse to endorse Kamala Harris is the LA Times. And both are, really leaning left. This means that, people with money at this time are betting on Donald Trump. We see that on the markets as well. Money is going to Donald Trump, which means that at this time, if Kamala Harris can, let's say, win the election this time, will have a pretty significant impact on the market on the day of the election, or even the next day. That will be interesting to see. What can I say about the elections? Not much more, but the thing that the spread is contracting again closer to the election, it's very normal, I would say. Even on the prediction markets, it's a natural bias. When you are betting on something, the closer you get to the point it will get decided, the less you are sure about the outcome, right? And I think this is exactly what happens at this time. Nothing much more to say, to be honest. But from what I've seen, in my city, I checked, the early voting locations because I wanted to do that. Unfortunately, there was a line that was really, really crazy, which is interesting because South Carolina is a red state. whatever happens, it will be red. So you could think that not people would be not that motivated for a state that has very little chance to flip. But there was a huge turnout and hours of line. So I'll try to vote on the election day, because there will be many more voting location open. Okay, so let's move on. In terms of geopolitics, not much things. There's not many things coming from Ukraine and Russia after the BRICS summit in Kazan last week that we spoke about. I think the only interesting thing at this time about geopolitics was the situation in Georgia. So Georgia is in Eastern Europe, a country that is close to Ukraine and Europe. It's in the what do you call this? Um, um, Oh, I don't remember. Whatever. But so you'll check on the map. It's a country that is in the zone of influence of Russia, and they were holding elections with separation between what they call the Georgian Dream Party, which is leaning toward Russia, and the president of Georgia, who is leaning towards Europe. So, which means that basically it was a kind of a referendum between for the population to say, okay, are we going on more on the Russian side or more on the NATO side? And the elections saw the party favoring the Russian side winning the election. The agency confirming the elections in Georgia said that this was a regular election, but obviously right after that we have the the side of the president, Zurabishvili, I believe. Yes. And so said that, obviously there was a Russian interference, that the elections were stolen. It's basically, it always goes the same way, and it's always the same rhetoric. And obviously, I mean, the reason that you have Boris Johnson at the bottom is because obviously the NATO side, the Western side, is not really happy about the results of the election. So they fed the rhetoric that Russia had manipulated the elections. Obviously, we'll have the same thing in the US in a couple of days, probably, if we see a Trump victory. But Boris Johnson said the elections are manipulated. This is an obvious interference inside the democratic process. It's always an interference when you don't win. And so, I mean, we have to remember that Boris Johnson is the guy that killed a peace treaty in April 2022 between Ukraine and Russia that would have avoided all the casualties and the losses of life in both Russia and Ukraine. So I mean, these guys are just crazy. So they claim that it's Russian interference. Which is interesting because if you check about the current president, who actually was an ally of the Georgian Dream Party when she was elected. She was elected with this party that is now leaning more pro-Russian. So if you look basically at the background of this lady, she was actually not initially Georgian. She's French-born. She has, ancestors in Georgia. She got a citizenship in Georgia when she became foreign minister of Georgia at the time. again coming from NATO, and more importantly, and this is the really interesting part, she's been a student of Zbigniew Brzezinski, the guy that basically defined in the late 90s the foreign policy of the United States for the next 20 years, and basically that we still kind of follow to this day. So she was a student of Zbigniew Brzezinski in Colombia. She was not Georgian, she was French, and she was elected actually with this party. I mean, it's really funny because they claim that there is foreign interference, and she really looks like actually the foreign interference in the Georgian process. I mean, what is also interesting is that if you look at what happened in Ukraine at the time, in 2014, when there was the coup against the democratically elected president at the time, who became the Minister of Finance of Ukraine. This was actually US citizen, Natalie Jeresko, who actually became the Minister of Finance of Ukraine and received the Ukraine citizenship on the day she became Minister of Finance. I mean, is it that he's saying? Would you say that it's foreign interference? So I mean, at this time it's just a joke. We just have to admit that these countries are the victim. So these countries, Georgia and Ukraine, are the victims of a fight between Russia and the US for influence on this country, and basically that's about it. So yes, is there a Russian interference? Probably. Is there a NATO, Western, I would say US interference? The same. I mean, and it's natural. That's basically how it works. So I think that the next week maybe will be interesting in Georgia to see if they try to pull out a kind of same situation as they did in Ukraine in 2014. Because the president has called for protests, all that kind of stuff, and we know how it unfolded in Ukraine with snipers and all that kind of crazy. I won't say shit, but that's what I'm thinking about. So let's move on. We said that we'd be short. We won't talk about Georgia for 2 hours. Geopolitics. I mean, Iran and Israel. So Israel retaliated last week on Saturday. I didn't mention it because I hadn't checked the news on Saturday morning before doing the live last week. So I didn't check, but actually Israel retaliated in a very, I would say, moderated way, meaning that they hit a couple of military targets. It was not crazy stuff that would unleash hell in the Middle East. So I think that part was really interesting, that they didn't want to go much further. The other reports that I've seen was that actually the Israeli objective was to destroy and to annihilate the S-300 air defense system in Iran, to be able to potentially strike more deeper into Iran without obviously the either or the jets or the Israeli missiles to be taken down by this air defense system. So we'll see what happens. This might not be the end of it. But I think that it's really interesting to see that they didn't go crazy on the retaliation. Obviously, I mean it's a dance that we've seen for quite a few months now. At least it's the beginning of the year. Iran says, "Okay, you did this to us again, so we retaliate." So it's again, want you, want me. But it's a dance that is going on for quite months. As long as they hit themselves with measure, I would say we should be fine so far. Okay, nothing much else to be honest in the Middle East either. So we can move to economy. Um, we've seen recently that the preeminence of the U.S. dollar in the global economy is still very strong and still and actually increased, which is interesting in the context of where we're talking about de-dollarization. So I checked about that recently. So what happened actually, when you have the usage of the US dollar increasing, is one of the main reasons is actually the de-euroization of the economy. The euro, which was kind of a maybe second currency to be used in global trade, global payments, is dropping significantly, which obviously benefit to the US. The yuan or the renminbi, whatever you call it, it's not really a factor at this point. So the US dollar is still dominant currency to be traded globally. But at the same time, you have to notice that this is data coming from this is SWIFT data. So which means that basically this is the data coming from the system used by the West, and you know that Russia and China are going away from the SWIFT system. Russia, obviously, they are totally out of it. I don't know if China still use it, but they are, the BRICS is getting away from this because they want to implement their own payment system. So this data is a little bit biased, but at the same time, I think we can see that specifically after the war in Ukraine, and everyone understood that basically Europe would be dying without cheap energy from Russia, and Europe be dying, maybe the euro would be dying at the same time. And we see this, in the economies of Europe, the debt that is crazy in Europe, the deficits that are accumulating. Probably in the next maybe 5-10 years, again, I mean, you can always kick the can very, very for a very long time, but probably the euro as a currency is probably, and Europe as well, is probably doomed at this point. This is my opinion. It might not be true. We'll figure it out. What else can we say? Yes, I mean the debt again. Same data all the time. We see that basically the change in nominal GDP is equal to the change of federal debt, which means that the only growth is coming from debt, which is there's no growth. We are in a recession. If it's financed by the public sector, it just that doesn't mean anything. We have data about jobs as well. You see that the ratio, I think that is interesting, the ratio of job openings to unemployment is decreasing, which indicates a really weakening job market at this point, which is obviously another sign of recession. The U.S. economy added 12,000 jobs in October, and it is way below the 106,000 expected at this point. And I mean, it's really interesting because no, I won't say this. Sorry, it's just something that I shouldn't say online and publicly. Okay, so we'll move on this one, if you don't mind. But I think maybe that's the next slide. Yes, I think that this one is really, really important. Why? Because first we have so that this is TLT, right? U.S. share price. This is long-term bonds, and what we see is that despite the drop in bonds, which is linked to the U.S. deficit, it starts in 2020. We reached the top, and then this was kind of the whatever it takes, financing liquidity like crazy, and now with the deficits, the Fed is forced to reduce interest rates, and then obviously this will fuel the deficits and inflation, and well, we've gone over this for a very long time. But now what I think it's also really interesting is that the market cap of TLT has been increasing, and basically the retail has been piling up into TLT quite significantly, which, I mean, there might be two reasons. If you have a 60-40, let's say, which is kind of still the reference, despite it's fallen into total irrelevancy since 2020. But if people have been doing some 60-40 portfolio for the last 20, 30, 40 years, maybe been doing well, so, and they basically adjust their portfolio like this with the price of TLT going down, where they rebalance their portfolio, they are buying more TLT the more it goes down, right? More bonds. And so their performance probably is not so good since 2020. But now, what's really concerning, in my view, is that the U.S. debt in such, I would say, in bad conditions. We have seen auctions on the U.S. debt going pretty quite ugly recently, because an investor is asking higher interest rate to cover the risk that is in the U.S. treasuries at this point. And I think that the biggest issue, and what is really concerning, is that, as usual, retail will be holding the bag on this one and take the losses, which again will impact the economy that is driven by consumption. So if people have less money, they will consume less. We will have more recession. Basically that's snowball effect at this point. Maybe we are done with the economy at this point. Again, I mean, there was not much to say. Yes, just to confirm what I just said before, is when the Fed cut rates in September, the US credit derivative swap jumped massively. Again, this is a confirmation that there's a real concern about the US debt. Investors now are thinking that, well, they are admitting that it will get crazy from that point, and so there's a higher risk on the US debt, and this is why they are asking higher interest rates. This is where we're going. So now we put this chart in comparison to this one. I mean, it will probably get ugly for a lot of people in the US if they are still piling up into TLT at this time. Again, I mean, it's not an investment advice, as I should say, which I would show here right now. It's not an investment advice, but it's more risk advice. This is what the investors are seeing in the market. The CDS is a really good indicator about that, and this is why the interest rates on treasuries are going up at the time the Fed is cutting interest rates, because they say, I mean, most investors understand that it's totally unsustainable path that probably will explode at some point. So where do we go from here? Yes, we go to the markets. It's funny because, I mean, last time, guys, you reacted a lot. I mean, so I'm always wondering, when no one reacts, if I'm actually the only one on the here. But anyways, so let's continue this. So this is the price action for October. So October went up and then basically lost about everything last Thursday for the last day on the month. Interesting, it came with poor data on the jobs, more concerns about yes, I mean the jobs again. We had some text that had bad prints on that day. We had Microsoft that was down 6%, I believe, something like this. Meta was down 4%. We had poor liquidity on that day, from what I've seen, which can always emphasize some strong move. And the core PC at this time on that day was having a big monthly gain since Apple, so not good for interest rates and the stocks. Um, I mean, it's interesting because we were seeing the stocks levitating at this point, and at the time where we had interest rates going up. So obviously, I mean, the cost of borrowing going up, it has to have an impact on the stock market. So these were how the interest rates, the yields were going up in October, going up like crazy. It kind of makes sense, that at some point with interest rates going up, it starts having an impact on stock. To what extent? Obviously, we don't know. We will see, but that will be interesting. Um, the dollar spot index went up pretty significantly in October as well. It's interesting because the dollar is still a risk off asset. Um, I mean, this is a post that I made, I believe, this week, which was about or maybe it was a comment on a post from someone else. But I mean, the US treasuries are not a risk off asset anymore at this point. This is the kind of thing that I was trying to say as well, with the charts before. When you see the CDS going up, interest rates going up, so people are demanding a higher premium for the US debt, which means that it's not, or it's less, a risk of assets anymore. And so when we see gold going up, when we see the US dollar going up, that are basically two risk of asset at this point. Now treasuries are not kind of playing that role anymore, and I think that it's a really significant shift in the investment landscape, because what does this mean? This means that the 60-40 portfolio is dead. Basically you have to have about the same returns on both equities and long-term bonds for that to work. And that's what we had over the last, maybe since the 80s, probably. Yes, last 40 years. Yes, 80s, because this is when Bridgewater started, and they started the risk parity in an environment where it was booming. You had similar expected returns for bonds and equities with diversification. So I mean, risk parity for the last 30 plus, yes, let's say 40 years. I mean, it was an insanely good strategy. But this strategy, risk parity, specifically, if you do it between equities and bonds only, and you don't have something to counterbalance, like commodities, for instance. I mean, if you only play equities and bonds, if bonds is not a risk of asset anymore, as specifically doesn't have an equivalent return long term with equities, risk parity is probably dead as well. So 60-40 and risk parity. So we are seeing some risk of assets going up. Gold going up, although we had a retracement over the last couple of days of gold. But I would say that it's in the natural um, kind of volatility of gold. We see these huge drops. We have many. If I remove the banner here so that I can see the dates exactly. So we have, early October we had a drop. On the 23rd of October we had a significant drop as well. We had a significant drop recently over the last couple of days. But again, I mean, it doesn't mean in any way that it changed the global picture, because obviously the driver behind this is the U.S. debt and the Fed interest rate policy behind it. So this is where we are. There are, you say, hiccups on the road, and basically that's it. Oh, I said I would be fast, but it's already 10:50. What else do we see? Yes, we see the Bitcoin price, similar as gold, is going up. We had a drop with gold again over the last couple of days. I mean, it was funny because the other day, so yesterday or the day before, someone was mentioning a bloodbath in cryptos when it went from 72,000 to 70,000. I mean, it's insane to call this a bloodbath. This means that these are people that are used to equity volatility, and basically not used to, let's say, the average or median volatility in the crypto market. So a retracement of 2, 3, 4, maybe even 5% is not big of a deal in a crypto market anyway. So yes, we have ups and downs along the road, but it follows the same pattern as the other risk of asset at this time, which is interesting again because with the institutionalization of Bitcoin with ETF. So over the past, let's say, year and a half, we had Bitcoin really becoming more correlated with the equity markets, which kind of is lower right now. But sometimes you could have the feeling that Bitcoin was actually becoming a risk on asset. But it's probably still Bitcoin a tool, a vehicle to a safe haven from basically the Fed, the Federal Reserve shenanigans on interest rates, similar as gold. So I would argue that there are these two factors inside Bitcoin now becoming a risk on asset because of the institutionalization of Bitcoin. And at the same time, it's still a much harder asset than any fiat currency. So this can serve as digital gold. So it's a kind of, I would say in between. We've seen massive inflows on the Bitcoin ETFs over the last week. So that was interesting to see. It seems that some big guys are accumulating some Bitcoin as this price. Maybe they are, a lot. I believe that a lot of that is going into the expectation that Trump will win the election. Basically, people leaning on the Trump side on the market is what we've seen in terms of positioning on the market. And we know that Trump is much more favorable to the crypto space than the Harris administration would ever be anyway. So this is probably because Trump was seeing leading the polls, leading the prediction markets, that people started piling up into Bitcoin as well. So we'll see. Again, that will be pretty interesting. I think that, and yes, I showed that again. Why? Because I wanted. Oh, oops. not exactly what I wanted to. Yes, because if you had one single thing to remember about these Croissant files today, is this chart, which shows the US credit derivative swaps going up right after the Fed cut. And this single chart basically helps you understand what is happening in the bonds, which in turn helps you understand what is happening in the gold market, in the Bitcoin markets, and we might have a day of reckoning in the equity market at some point. And basically that's it. It's 10:55. This is the first time I finish in such a short time. I really thought that I would be able to make it in 30 minutes. Unfortunately, I didn't. So I spoke for 40 minutes. I would say not that bad for me. Right, not that bad. Thank you very much for being here, as usual. And see you next week. Enjoy the weekend. Don't forget to vote, whoever you vote for. Again, that was basically the title of this show, which is, your life depends on it. Wherever you stand, it is probably true. So vote, and we'll debrief this next week.